OPEC has failed to agree on oil production quotas. Saudi Arabia's oil minister described Wednesday's meetings as, quote, one of the worst we have ever had. Ali Al-Naimi delivered his damning verdict after 5 hours of talks produced zero consensus. The cartel was divided right down the middle. 6 countries pushed to increase supply while the other 6 blocked the move. Well, to explore the politics at play here, I'm joined by someone with more than 20 years' experience in the global energy markets. Jason Feer is Senior Vice President and General Manager at Asia Pacific, for Asia Pacific at Argus. Jason, very good to see you. What are the politics at play here?
Well, I mean, there's always been this split in OPEC between countries like Saudi Arabia, Kuwait, and the UAE on one side, and Iran, Venezuela, Nigeria on the other side. And a lot of it is really an economic question, because Saudi Arabia can increase production, and if that brings prices down, then they make up for that on higher volumes. If they do that and bring prices down, countries like Venezuela and Iran can't increase production. They're maxed out. So any drop in prices really comes out of their pocket. So you have this very fundamental split between those who can produce more and care about global economic growth and those who can't and are really more focused on price and just want to maximize their revenue.
Jason, does this crucial divide between those that can produce more and those that can't render OPEC fundamentally dysfunctional here?
Well, you know, to a certain extent, OPEC in many ways has always, I mean, it's a coalition of the willing, I guess it's always been. And so the individual countries have always acted in their own interests. I think Saudi Arabia sees lower prices, not dramatically lower, but somewhat lower prices, as in their interest, because it will help sustain growth and therefore help sustain demand. And I think what's going to happen in the wake of this meeting, and the Saudis have already said it, is that they're going to produce and put onto the market as much supply as people need.
So the tie that binds,
I think the fact that OPEC...
The tie that binds, you're saying, is this interest in keeping the global economic recovery going and not wanting to endanger that with higher than necessary oil prices. Is that a danger?
I think it is, and I think in some respects the hawks, you know, the Irans and Venezuelas, may be taking the short view, whereas I think the Saudis are probably taking a longer-term view. We're already beginning to see demand destruction in the United States, where gasoline prices get above $3.50 a gallon or so. You get demand destruction. There's some signs that the efforts to constrain inflation in China and India are also slowing those economies down, and that will reduce demand growth. So there is a chance that these high prices will eventually lead to some sort of sharp correction downward. Where oil basically just gets too expensive to afford, and then you end up with a glut.
Right.
So I think that's the concern that the Saudis have at this point.
Well, let's get back to the politics at the moment, because of course we've got the Libya conflict situation going on. Was this stalemate, this decision by 6 members to block an increase in production quotas, some sort of slap, a thumbing of the nose at the U.S.?
Well, you know, certainly within OPEC there are countries. I mean, countries like Iran, which I think has seen itself from time to time as in the U.S. gun sights. There are certainly countries that have a problem with what's going on in Libya, with the role that the United States and NATO are playing in Libya. Venezuela has been very outspoken about its desire to see a different approach to what's happening in Libya. So I think there was certainly an element of that. I think fundamentally, though, in OPEC has always been an economic club, and I think that's primarily what's at play. But I think from the people who don't want an increase, I think there's a bit of sentiment that this is a bit of payback.
Right. All right. Jason Feer, thank you very much for joining us.